the heart of this nation, under skies so blue,
there's a spirit that's stirring, values strong and true.
from the mountains to the prairies, from the cities to the sea, we stand for liberty, for faith and family. We're diving deep into the heart of what we believe.
Welcome to the Deep Dive. We sift through the latest articles, research notes, all sorts of things to bring you the key insights tailored just for you. Today, we're really digging into a compelling set of sources. We're talking about some pretty serious allegations. A magic mortgage money laundering scheme, and its proponents claim it's directly tied to a very prominent political fundraising platform. Our source material for this deep dive is from excerpts of an article in American Thinker. It's by Jerome R. Corsi, published July 30, 2025. And our mission today is really to explore the claims being made. They come from an Arizona state senator and a former law enforcement whistleblower. They're asserting they've uncovered this alleged scheme through a really meticulous years-long investigation, basically using public records. So, okay, let's unpack this. The story really kicks off just a couple of days before this article came out, so July 28, 2025. That's when Arizona State Senator Mark Finchem, he's the executive director of the Election Fairness Institute, EFI, he issued a press release. And this release shared the results of, a pretty remarkable 15-year investigation. It was conducted by Shawn Taylor, who's a former assistant police chief down in Millersville, Tennessee. Finchem, in his statements from the source, he described what he believes is just a breathtaking scale of this alleged corruption. His words were, "A level of public corruption never before seen in this nation that has been financed by everything from black market child trafficking, distribution of fentanyl from China, and cocaine from the Mexican cartels." Pretty strong stuff. Finchem also claimed that a complicated magic mortgage money laundering network has fueled the lies and deceit at the heart of the Democratic Party's ActBlue political fundraising scheme. And he asserted the evidence would fully expose the ongoing criminal enterprise known today as the Democrat Party.
Yeah, and what's really striking here is just the sheer breadth of the claims that Taylor is making. Shawn Taylor, he's identified as a federal whistleblower, former law enforcement. And apparently, he's been trying for almost 2 years now to present this investigation, which he says is thoroughly documented. He even contends his findings stretch all the way to the opening of the U.S. southern border under the Obama and Biden administrations. Says it started with an agreement Archbishop Theodore McCarrick allegedly brokered with Honduras way back in 2011. And Taylor explains that his initial discovery, it didn't start with some grand conspiracy theory hunt. It actually began much smaller. He was investigating drug trafficking in Tennessee and stumbled upon a specific kind of peculiar mortgage. At first, he thought it was just an error, a typo or something. But after digging into property deeds, mortgage insurance docs, tax records, he claims they found a pattern of different amounts of money consistent with mortgage money laundering, quote, which suggests, that maybe these kinds of mortgage transactions could be a way to, legitimize illicit funds. Because you're dealing with large sums, multiple banks, complex paperwork, maybe easier to hide things.
Easier to hide suspicious activity amongst all the legitimate noise, maybe.
Exactly. And Taylor further outlines his claims. He says this alleged money laundering was traced into, quote, numerous mortgages connected to individuals and nonprofit organizations who all had relationships with ActBlue, end quote. He alleges this points to a transnational criminal organization, one that, he claims, depended on the complicity of international banks and maybe even our government and foreign governments to succeed.
Wow, and the allegations, they get even more, striking. The article highlights this claim that Democrat Party operatives behind ActBlue allegedly developed these mortgage loan fraud techniques as early as 2002. Just think about that. That's 2 years before ActBlue even officially existed. And by 2016, the claim is these techniques allowed ActBlue to funnel billions with a B of dollars to fund what the source describes as radical left NGOs. So to try and make these huge allegations more concrete, Finchem and Taylor point to specific examples. And one that really stands out involves Regina Wallace-Jones. She became CEO of ActBlue in 2023 after serving on its board. It's noted she has a background in real estate. Her last job actually was chief operating officer of Lend Street Financial, which is a lending platform. Okay, so Finchem and Taylor contend that Wallace-Jones invested her earnings in real estate. California, Texas, Virginia. For our deep dive today, we're going to focus on one particular property they investigated, 1257 Runnymede Street in East Palo Alto, California. Think of this as like a specific case study for you listening, a window into how this alleged multi-million-dollar scheme might work, transaction by transaction.
Right. Let's describe this property for you. It's actually a pretty modest single-family home, 5 beds, 3 baths, about 2,668 square feet, built in 2002. Its current estimated Zillow price is around $1.7 million, and its 2024 assessed value is just under $1 million at $979,030. Now, Shawn Taylor used a LexisNexis property history report for this address, and it's worth pointing out, LexisNexis is considered, one of the largest data warehouses of public and non-public records info anywhere. It's a powerful tool.
Definitely a go-to for investigators.
Absolutely. So let's walk through Taylor's interpretation of the alleged transaction history for this Runnymede Street property. According to his analysis, May 21st, 2002, Regina Wallace-Jones and her husband, Stafford Jones, reportedly bought the home from Clarum Corporation for $689,500.
Okay. Standard enough so far.
Yeah, right. But on that same day, May 21st, Wallace-Jones and her husband allegedly got a $651,600 mortgage from Wells Fargo Home Mortgage. Also on that very same day, Regina Wallace-Jones allegedly received 2 additional loans from Wells Fargo Home Mortgage. Totals were $651,600 and $552,253.
Yeah.
And still on that same day, the sale price was allegedly listed as, well, an astounding $68,950,000.
Wait, $68 million for a house bought for under $700K?
That's what's alleged in the report Taylor analyzed. And with that massive price tag, 2 unlisted sources reportedly made additional loans of $10,035,000 and $55,125,000.
Hold on, that's a lot happening on one day for one house. Can you just sort of paint a picture of what that looks like? Why would anyone allegedly do all that at once?
Well, you can picture like a rapid flurry of financial activity, almost like a shell game maybe, all focused on this single property, all happening simultaneously according to the timeline presented. And Taylor alleges it didn't stop there that year. Later, December 6, 2002, Regina Wallace-Jones and her husband allegedly got 2 more mortgage loans, $551,520 from Wells Fargo Home Mortgage and $100,350 from Wells Fargo Bank.
Okay, so adding those up.
If these records are interpreted as Taylor alleges,
Yeah.
they'd established that in 2002 alone, on this, remember, modest house assessed under $1 million in 2024, Regina Wallace-Jones and Stafford Jones allegedly received 7 mortgage loans. Kind of total. A staggering $57,632,323.
$57 million. Wow.
But the alleged irregularities, according to Taylor's analysis, continue. December 24, 2004, Stafford Jones and Regina Wallace-Jones allegedly got another $160,000 mortgage loan from Wells Fargo Bank. Then, January 13, 2005, the couple allegedly received a $250,000 mortgage loan, this time from JPMorgan Chase Bank. And then fast forward quite a bit, July 15, 2015, Stafford Jones allegedly sold the Runnymede home to himself and his wife.
Sold it to themselves.
That's the claim. Using 3 mortgage loans, $565,000, $74,800, and another $565,000, all allegedly from Wells Fargo Bank.
Okay, my head's spinning a little with the numbers. What's the grand total alleged then?
If these contentions are true, the total alleged loans on this one property sum up to $59,898,723, so just shy of $60 million, on a house currently assessed at less than $1 million.
So, okay, what does this all mean? How do these numbers, these transactions, how do they point to what Taylor is calling red flags, the signs of potential financial funny business?
Right. Taylor identified several specific red flags he believes indicate mortgage lending fraud. And these are, often seen as classic indicators in complex financial schemes. For instance, back on May 21st, 2002, he noted those 5 simultaneous filings, all with inconsistent details. He had 3 with the same $689,500 sale price, but different loan amounts or borrowers, plus 2 others with, quote, wildly different sales prices and loan amounts. That's a flag.
Inconsistency is key there.
Exactly. He also flagged that $10,035,000 mortgage loan versus the listed sales price on that same day, called it a grossly inflated loan-to-value LTV ratio.
Okay, inflated LTV ratio. Can you break that down simply? What does that mean practically for, someone listening?
Sure. Think of LTV as just how much you're borrowing compared to the home's actual value. Normally, a bank won't lend you more than the house is worth, right? Yeah. Maybe 80%, 90% LTV is common. So an inflated LTV, like alleged here, where the loan amount is way, way more than the property's value. Well, Taylor suggests that might indicate what he calls a synthetic debt injection, basically creating fake debt or maybe a placeholder loan just used to move money around temporarily.
Got it. Creating debt out of thin air, essentially.
That's the implication being alleged. Taylor also points to a pattern of layered lending strategy all within 10 days, possibly to cycle fraudulent proceeds. Layering is a common money laundering technique. And those multiple title transfers between Regina and Stefan, he regarded that as title bouncing. You sort of picture it like selling the property back and forth to themselves.
Why would someone do that?
Well, the allegation suggests it could be to obscure the true ownership history, or maybe to reset mortgage records somehow. Furthermore, he apparently found inconsistent official documents for the Runnymede property. Things like the number of stories or bedrooms didn't always match up. Suggests structure mismatches across different reports, likely filing manipulation or identity masking, according to Taylor's analysis.
So, messing with the basic facts of the property itself in the paperwork?
That's the claim. And the LexisNexis report itself apparently flagged 13 to 14 deed transfers in about 272 months. Taylor noted that reflects an extremely high frequency of transactions for a residential home, which he says is common in laundering or what's called equity cycling setups. And finally, the report flagged that the current owner doesn't match the recorded owner as of over 3,400 days from when Taylor did his analysis. This, he claims, fits a pattern that implies long-term nominee occupancy, where someone holds the property officially for someone else, or maybe shell entity concealment, using a fake company to hide who really owns it.
That is quite a list of red flags. It's almost like a checklist for potential financial irregularities. It's like you're connecting the dots in a really complex puzzle for us, for you, the listener. It really shows how these individual flags could combine to form a pattern.
Precisely. And this pattern, Taylor claims, isn't just an isolated thing at Runnymede Street. He alleges he's documented this pattern of mortgage loan fraud over multiple properties and many years, which suggests, if true, a systematic approach. Since that's another example. 2013, 2856 Potomac Drive in Great Falls, Virginia. There, the listed sale price was $1,875,000, but it allegedly commanded $150 million. That's $150 million mortgage loan from an unlisted lender.
$150 million on a sub-$2 million property.
According to the claim. And the deed for that transaction, a LexisNexis search apparently couldn't even find it.
Okay, it is absolutely crucial here to pause and remember these are incredibly serious allegations, and they're being made by specific people, Senator Finchem and Shawn Taylor. How does the source material itself frame the current status of these claims? Are they proven, investigated officially?
That is a really, really important point for everyone listening to grasp. The source material we're using for this deep dive explicitly states, and I'm quoting here, no official body has accused Ms. Wallace-Jones, Mr. Jones, or ActBlue of any criminal acts in connection with these claims. Quote, currently, these allegations come only from Finchem and Taylor, full stop.
So, purely allegations at this stage, based on their interpretation of public records.
Correct. And this obviously raises a big question for all of us. What happens next with these allegations? Especially since they seem to be derived mainly from publicly accessible records. Will authorities look into it? Will there be counter evidence? We don't know yet.
Indeed. It certainly makes you think about the power of public record investigations, doesn't it? And how they can potentially bring these complex alleged financial schemes out into the open. So let's recap. We've taken a deep dive today into these sweeping allegations of a magic mortgage money laundering scheme. We explored the very detailed example of the Runnymede property with its alleged multi-million-dollar loans on a house assessed under $1 million. And we broke down those specific red flags, the simultaneous filings, the inflated LTVs, the title bouncing identified by the whistleblower Shawn Taylor from public records. So, as you go about your day, here's something to mull over. How might the continued scrutiny of public records, the kind found through tools like LexisNexis, how might that fundamentally change your understanding of complex financial systems, and particularly their alleged connections to political funding? What more could be uncovered just by meticulously examining data that's publicly available but maybe often overlooked? And, how could that impact transparency across different sectors?
In the heart of this nation, under skies so blue, there's a spirit that's stirring, values strong and true. From the mountains to the prairies, from the cities to the sea, we stand for liberty.